Welcome to this week's Cattle Call. I'm Susan Littlefield. As you see, Brad Kooima is joining us today. He is Kooima and Varlick out of Sioux Center, Iowa. We cannot forget about the WASDE report that took place this week, and we know it had some influence on what we've seen within this cattle market. Add to that, we've got cash markets that have been moving to the plus side, a dollar higher. We did see some early bids on Tuesday as well. But then here's the big question. Are we killing enough cattle? We're going to get that and a lot more as we talk on today's cattle call. So, Brad, we do have to start out. WASDE report came out. Part of the reason we saw the feeders take the jump they did?
Absolutely. I think that's a great place to start, Susan. Thanks for having me on again, of course. Always like it. But when the USDA basically didn't reflect what most of us think the actual number of exports have been, and then carried that into a little bigger carryout for the new crop corn. I saw a pretty steep break in the new crop corn, and that translated into a little rally here in the feeder cattle. The feeder cattle to us here looks like sometimes you get a sense of market wants to rally or wants to sell off. My sense is the feeder cattle really want to try to rally here, but when you've got cost of gain being that what it is, that has been holding us back a little bit. So a solid day higher on the feeder cattle for sure today. That helped, and sometimes that helps kind of the deferred cattle market, but it didn't seem like it made a whole lot of difference today, Susan.
Is it a short-term blip?
I don't think so. I continue to be long-term friendly because of what I think is happening with the overall female model. 4 years of increased heifer slaughter, 2 years of significant cow slaughter. Unfortunately, we just cannot get through that, and that's because we need some rain west of the Missouri River, especially. Unfortunately, guys who spent a lifetime building a cow herd are taking cow-calf pairs to sales all over the place in western South Dakota and North Dakota. And that's been a little bit of a contributing factor to the difficulty in the front end of the market. We need, in a perfect world, I would love to see our fed slaughter jump up to the 660 level and then just stay there for a while. And then I think you would see the grade decline, you'd see the weights decline like you normally do when you have a high price feed. And then we would, come out of the back end of the market much better, which is what normally happens with that. So I still want to say down the road that the market's got all kinds of upside potential. I just wonder if maybe we don't have to, the saying is chop wood for a month or so here. I don't think the cash gets much lower, if at all. It should be higher, obviously, based on where the basis is for futures, and even more importantly, based on where the box beef values are, of course. I think that that there's a bit of pressure on the commercial here to support this cash market a little bit.
Well, having said that, and we saw cash even having those early discussions on Tuesday morning. Does that set the tone for what we could see the rest of this week?
Yeah, it was
Is the need
unusual.
there?
Yeah, I agree. It's a good point. It's unusual. Typically, the trade, of course, Thursday, Friday, right? And then there was one incidence as high as to a regional, but still $1.22 in your part of the world. There's been some 20 and a little bit of 21, mostly 191. You still have one of the packers trying to get a lot of days, which is frustrating. I would encourage us all to let's take the reins here. There's no reason to give away the farm to the packer, either through a formula or through giving them 30 days to pick the cattle up. Let's own up this thing a little bit, folks. They're not going to give it to us. I think we're going to have to take it back, okay, the market. And my goodness, with the boxes at the price levels that they are, this will be one that the history books look back on and go like, so that's how it ended, huh? I hope not. But the industry needs some significant readjustment here, Susan, and let's hope we get there because this is discouraging to say the least.
So, are we killing enough cattle at this point?
Honestly, I would say we aren't killing enough fed cattle. No. Part of the slaughter is this non-fed thing because of the drought and because of high price feed and some liquidation and all the rest. I would love it if we could boost that up a little bit. Now, I haven't said that, okay? Let's be a little bit glass half full. I've been discouraging today, haven't I? You've had every excuse, legitimate and otherwise deal here for the last month already now for the packers to not be able to kill fall. You've had cooler cleanouts, you've had the XL ammonia deal that they had to take care of at all the Cargill plants. So you had one outfit that had a computer glitch, right? Couldn't kill for a day and a half, yada, yada, yada. But I think hopefully there isn't some other weird thing that happens, but I think we're through that whole mess, Susan, and let's go ahead and kill 6 days a week. I know that there are some packers that are incentivizing some of this Saturday help, money wise. That should help. They certainly have enough profits that they could give them a little bit of a raise, right? So I those are positive steps. Let's hope that in the next 2 weeks or so we talk about it and go like, hey, we did it, for a couple of weeks at big slaughter. That's what I'm hopeful for, Susan.
Well, you just talked, and as we wrap up, you talk about this down the road. At how far are we looking down the road for this optimism to show up? Tough question.
That's a tough one. And the old guy here has learned that it always takes twice as long as you think. I hope that's wrong, because I think I just might have blurted earlier in our interview that it might take a month. So that means 2 months. Oh man, I hope not. We haven't had any seasonality to the market lately, because anybody that thinks seasonally is going like, well, this Brad fell on his head today. I mean, what's he talking about getting bullish in May? Typically we've made our high, right? March, April. This is not a typical year. I expect that demand is going to stay robust. And I think some of that's supported by the desire to get out after being cooped up with COVID. Some of it is going to be sponsored by the fact that people have more available cash thanks to a government like this one, and they're going to spend it. So let's call it 30 days and let's hope Brad's wrong. But, I really think by the time we really, really like the markets, late third quarter, early fourth quarter, and by really like the market, I'm talking about a market that's someplace towards 140.
All right. Sounds good. Thanks so much, Brad.
Welcome.
Brad Kooima has been joining us today. Just a reminder that commodity futures and options do involve substantial risk of loss, and they're not suitable for all investors. That's this week's Cattle Call. I'm Susan Littlefield.